Right now could just be the biggest opportunity of your lifetime. Why? Well, 5 of the world's most important electric vehicle manufacturers have just lost massive value in their stock price. For what reason? Why? Simply investor sentiment, nothing else. However, which of those stock companies, BYD, Tesla, RVN, NIO, and Lucid, should you actually consider? Well, let's have a look at what's really going on with these 5 companies. Hello my friends and welcome to the channel. I'm the Electric Viking, great to see you. Thank you for subscribing. Welcome to all the new subscribers and welcome back everyone else. Just a big shout out and a thank you to those of you who subscribe to my boys, Jack and Cal's channel. Really appreciate your support. Really appreciate your comments. The boys absolutely love it. They're so stoked to have you supporting them. So just wanted to let you know about that. BYD. I've been going on since I started this channel about a year ago saying people should buy BYD stock. So have I gotten this one right or wrong? Well, when I first started telling people to buy the stock, BYD's stock price was sitting at $37.80. That was exactly 12 months ago to the day. On November the 1st, 2021, BYD stock price rose to $79 US. That was its absolute high. It's now sitting at $57.17 US. So it's fallen a little bit. However, it's still up massively since its price from 12 months ago. Does that make it a good buy still? Price to earnings? Not really, if you think about it. Growth? Completely different story. For example, this month, right, in April, BYD nearly caught up to CATL in global electric battery market share. They also passed Volkswagen. I mean, really, they're going to be catching up to Tesla soon unless Tesla's factory starts actually producing electric cars. I'm talking about the one in China, by the way. BYD are kicking goals. In addition, they have numerous factories coming online, numerous factories being built over the next couple of years. Their plans are pretty spectacular. When BYD plans something, they seem to do it. They've got a good track record. Is it still a good investment buy? Absolutely. Has its price tanked like its competitors? No. BYD's price is still relatively high in comparison to its direct competition. Who are those companies? Well, one's Tesla, of course, and as I'm sure you know, Tesla's stock price has cratered over the last few weeks. However, some context is needed. 12 months ago, Tesla's stock price was sitting at $580 US. Today, it's at $745 US. So it's still up versus 12 months ago. If you bought 12 months ago, probably wouldn't be in too bad of a situation. But if you'd bought on November the 1st, 2021, yeah, you'd be well and truly underwater. On that day, Tesla's stock price hit an all-time high of $1,222 US. Well, now the naysayers are saying they were right. It's dropped all the way down to $740 US, which is, well, an enormous decline. To be fair, that's nearly $500 off its previous all-time high. And while it's not quite half that all-time high, it's not a long way off. But to be fair, that all-time high only came about for one single day. So you'd have to be pretty damn unlucky if you bought on that day and then you happen to decide today was the day you needed to sell. Don't sell if that's what you're thinking. Now, Tesla's price to earnings ratio is currently sitting at exactly 100. 100.11 as of the time of making this video. So it's its lowest in history. It was at about 900 a couple of years ago. Does this still mean it's good value? Not really if you base it on today's fundamentals. If you base it on Tesla's future growth prospects, that's an entirely different story. And I personally am definitely going to buy more Tesla shares within the next few days if I can make that happen. That's my plan. Because frankly, this could be one of the cheapest price points of entry for Tesla for the next decade. What about BYD's other competitors? Are they even more worthy of your investment dollars, or are they even worth considering even more so? Maybe they are actually. Maybe they are. Why? Well, 12 months ago, Xpeng's share price was sitting at $25.70. As of today, it's worth $19.91. It's gone down from 12 months ago. What's happened over that period of 12 months? Xpeng has only proven to the industry it makes excellent cars, but it can massively ramp up manufacturing of its EVs. It's likely to deliver 250,000 electric cars this year, nearly as many as Volkswagen will deliver for the entire year. Next year, it's going to deliver closer to 400,000+. So is it really fair that Xpeng's stock price has crashed from $50 on the 10th of January down to $19 today? Well, honestly, there's really no fundamental practical reason for this to have happened. Nothing's changed. Really, the only thing that's happened is that Xpeng sales have come down in the last month thanks to the shutdowns in Shanghai in China. That'll, of course, fix itself within the next couple of months. Xpeng will be back. Their former sales, their share price, in my view, will rebound pretty quickly. And I'm holding a fair bit of Xpeng stock right now. I believe that right now is the cheapest price we're ever going to see Xpeng in history. But that's just my guess. I'm guessing here. If you're an Australian, don't listen to any of this video. I can't provide you with any investment advice. Just ignore everything I say. Just consider this for entertainment purposes only. Xpeng at $19 is an absolute bargain. Entertainment purposes only, remember that. What about Xpeng's closest competitor, NIO? Well, 12 months ago, NIO's stock price was $33. Today, it's sitting at $13. It's worth, what, about a third of what it was worth 12 months ago. The stock actually hit a high of $50 on the 28th of June in 2021. $50 down to $13 today. Is that fair? Is that realistic? No, not really. This is a market panicking. The market's emotional. The market's overreacting to a series of really insignificant things. The reality is, what have we learned over the last year? We've learned that China loves electric cars. Europe loves electric cars. Australia loves electric cars. The US loves electric cars. I could go on and on forever. We've learned that NIO is going to sell their electric cars in Europe. It's already doing so now. We've learned that, what else have we learned? NIO is going to America as well. What else have we learned, right? We've learned that NIO makes some damn impressive cars and that they are, albeit slowly, ramping up production. Now, we know also that all of these car companies that I've just mentioned, NIO, Xpeng, Tesla, and BYD, have a proven track record of success. Yes, it's true, NIO and Xpeng haven't technically made a profit yet. However, their margins are steadily improving over time. It's only a matter of time before they do make a profit, in my view. What about the next two stocks, Lucid and RVN? Can we say the same for them? Absolutely not. However, their stock prices have, well, the market is saying they've tanked. Is this true? And should we consider investing in either RVN or Lucid based on their current bargain stock prices? Well, let's have a look. Lucid current price, $14. Now, keep in mind that a very large percentage of this stock is owned by the Saudis. The government over there owns, I believe, it's the number one largest shareholder of Lucid. So it does probably have some say over what happens in the company, which could be a potential risk factor in my view. However, the stock is cheap. On the 20th of November, Lucid's stock price hit an all-time high of $55. It's now sitting at $14. Would appear to be a bargain. At least that's what all the so-called experts on seeking alpha are claiming. Is this really true? Do we really know for sure that Lucid is not going to go down even further? Well, on January the 11th of 2021, one day after Lucid's IPO, their stock price sat at $13. Almost an identical price to where it's at today. What's happened over the last 12 months since that first fateful day? To be honest, well, we've seen their products. Their products are very impressive. They're also extremely expensive. We've heard some, frankly, very, very optimistic plans from their company. Can they achieve those plans? Personally, I don't believe they can. And I've explained why I don't believe they can in a number of different videos. Do I think Lucid's stock price right now is something you should consider? Absolutely not. I don't think that Lucid's stock price is cheap in any way, sense, or form. They have no proven track record of ramping up production in anywhere near the volumes of their competition. Believe it or not, Xpeng, NIO, BYD, and Tesla are most certainly their competition. So let's rule that one out. So what about RVN? I mean, Rivian has pretty big backers. Ford is their number one shareholder. Amazon owns a lot of stock. And their share price has also tanked. When Rivian first listed on the stock exchange, it was sold at a price of $100. So on the 10th of November 2021, Rivian's stock price sat at $100. It then increased to an all-time high of $172 on the 16th of November. And boy, oh boy, do I really pray and hope that you did not buy on that day. Because since then, the price has gone from $172 down to $20 today. Why? Well, lots of reasons. Rivian made some pretty big promises, and clearly they can't keep them. They planned on pretty big production numbers for this year. They've revised those production numbers down significantly, and they're spending a lot of money. In addition, Ford is selling out of a pretty large percentage of its stock on the very first day, at the very first minute that it's able to. Obviously, when you buy into a company and then it floats on the stock exchange, there is a period called a moratorium. Ford has had to wait till the end of the moratorium. As soon as that minute ended, Ford sold a large percentage of their stock in Rivian. However, if you think about it, $100 on the day that they floated, today they're at 20. That's 1/5 of the original value. Does this mean that you should invest in Rivian? Well, personally, I would say there's better options. And I've just told you what they are. BYD, NIO, Xpeng, and Tesla. Fundamentally, all of those companies have pretty solid foundational futures. They've been delivering month over month in the tens, if not hundreds of thousands when it comes to their electric vehicles. Their products are sound. Their product planning has proven, these companies have proven track records. And honestly, really, I think their stock prices are at such incredible lows today that I'm actually quite shocked. It could be the opportunity of a lifetime. But once again, this channel is just for entertainment purposes only. Don't take what I have to say, do your own research. However, boy, oh boy, am I excited right now. Excited for the opportunities. You know, when I see these stock prices going down, a lot of people I know, they react emotionally. They get very emotional. They say, oh, no, the value of my stock's going down. Panic. You know what I do? I don't know why. There's something wrong with me. I get excited. And I just think, what an unbelievable opportunity. So which of these is most exciting to me right now? Well, personally right now, I have to say it's a tough one. But probably Xpeng. Xpeng are doing amazing things. And their current valuation of their company, in my view, is way below what it should be. So there you go. That's my tip for the week. Xpeng, you've seen the charts, you've seen the numbers, I've compared them all, and I hope that's helped you to make some decisions. However, once again, entertainment purposes only. Have a great day, and I'll see you again on the next one. Bye-bye.